This video, we're going to discuss a Q1 market update for Long Beach and also coastal Orange County. And today we've got two members of the Multifamily Socal team with us, Trey Mitchell and Mike O'Neill. Thanks guys for being here.
Thanks for having us.
Yeah, thanks for having us.
Absolutely. So let's dive into it. We're in Q1, it's almost the middle of February. And there's been a lot of activity with the team. And a lot of owners are active in the marketplace. And I just want to pick your brains on what's going on in Long Beach right now, Trey. What are you seeing in the marketplace?
Oh man, I would say just more signs that are pointing to recovery. In 2021, comparing it to 2020, we are starting to see the number of transactions that are taking place significantly increase. I think in 2020 we saw maybe 120 transactions, and now it's up by 80%. So in 2021 we ended with about over 220 transactions, and that's now carrying into 2022. So that's really positive. Price per unit looks really good at $268,000 a door on average. That again is from a 30,000 foot view, so it changes wherever you're at within the 50 square miles of real estate we have. But right now, again, it's pretty strong. A little quiet maybe in the beginning, in the first month of January, but I think we're over now 15 transactions that have taken place in the market for 2022. So all things look good.
And then you're leading the charge on a lot of those transactions that are taking place right now.
Yeah, definitely.
And then you're helping investors complete exchanges, putting them into properties that we currently are marketing. And then we've also got some new properties that are coming to market.
Correct. Yeah, we got a small 8 unit that's going to be coming to market in the Hellman part of Long Beach that we're looking forward to. So yeah, definitely have some opportunities coming available.
Mike, what's going on in coastal Orange County? How's the market?
We are fantastic. Just like the weather right now, it is moving. Doesn't matter if you're in coastal Long Beach, if you're in Seal Beach, Huntington Beach, Newport, Costa Mesa. Collectively, as our team right now, we have approximately 20 apartment listings in escrow. Many ownerships, if they've decided that they wanted to sell over the past few years, they're reaching out to us now and saying, Mike, Dan, Trey, values are at its pinnacle, interest rates are at its still historically low. I would like an updated valuation on my property, and we're able to help out as Trey is. Many ownerships exchange too. So there is a lack of inventory. However, due to our process, we're able to help ownerships exchange and find them their up-lake properties.
Yeah, that reminds me of a transaction that we closed towards the end of the year. We sold a small multifamily property in the city of Anaheim for an Orange County investor, and we traded them into a property on Ocean Boulevard that you two sold, the 10 units on Ocean Bliss.
Right, we had on that one 5 offers. It was the first time on the market since the ownership bought in the 60s, and through our process we were able to get those 5 offers, and then ultimately we got over list price for that person, and the buyer was extremely happy. They found their exchange property. The seller was ecstatic. They got a great price. It was a fantastic deal story.
And what did the seller end up doing?
The seller actually gave those proceeds to charity, and she had a foundation with Chapman University, and she really was passionate about these properties. It was the very first one she ever owned, and it was 10 units, and also sold a duplex for her. And then she just gave that to charity, and was very happy to help out the university, and then as well as the seller there too.
That's great. And then the buyer plans to renovate the property. As buying great, well-located coastal multifamily real estate, there's always a value add component to it. A lot of these buildings are much older, so the buyer plans to upgrade this and get the rents to market, or actually maybe even pioneer new rents. So, and you're seeing rents just on the rise. Well, we're seeing them in both markets, but Trey, what are you seeing on the rent level?
Yeah, I mean, in Long Beach right now, from again a 30,000 foot view, they increased about 7% from the last 12 months. So it's pretty strong. And from the last 5 years, I think we've averaged about 3% on an annual basis. So much stronger than the whole LA metro. So right now, rental rates are really doing good things, continuing to climb, and provide good, solid returns for our investors.
What are you seeing in Orange County?
Right now in Orange County, doesn't matter if it's apartment vacancy rates, it's just rents are just, it's tough to keep up with the market right now. Many ownerships are buying in at these low cap rates, yes, but after year 1, year 2, they're able to get phenomenal rents, great tenants. We're seeing a lot of people from either Los Angeles or inland area of Orange County trying to get in the coastal markets right now. We have an 11 unit in escrow right now in Costa Mesa. It was a very high price, a record price for that area. However, due to the potential with rents, it made a lot of sense for the buyer.
So that 11 unit, that was a really sought after property. Very, very high price per unit. 4 bedroom, 4 bath, 11 units, first time on the market, built in 1988. All had direct garage access, washer dryer hookups. Really kind of designed, 3-story level, designed more for like the roommate scenario. But as your point, it's $818,000 a unit for that property is what it's going to ultimately close for, which is a high watermark sale for Costa Mesa, especially for West Side. But it was a great piece of real estate, and the current rents were $34.30 a month, all 11 of them, and there's at least a $600, maybe even $1,000 lift in those rents.
Right, and I don't know how you just said that being so nonchalant. You know, over $800,000 a unit. That is just.
I know.
And it's not on the water, right? So
non-coastal.
Non-coastal, not on the water, but due to the age of construction, 1988, you can't duplicate that right now. And
that's right.
It's just 4 bedrooms, and when we walked those, they were 3-story, and you get in there, each one felt like its own house. It was, the tenants kept them so well kept too, and they had garage access, and just for the future, you see that property is going to be the hallmark of that area.
That's true, for sure. That definitely had a good feel. Even though it was a high price per unit, the CapEx was done. The owner meticulously maintained the property. Roof was done, windows done. All the tenants were paying on time. Everything was really clean. No, absolutely. And that's how we helped that exchange buyer acquire that property, because they wanted to put something, their money to work in a good asset and produce good cash flow for their family trust.
Yeah, I mean, right now there are so many clients out there saying, I will sell my building, Mike, Dan, and Trey, if you can find me a property. This buyer was already in exchange and they were ready to move, right? And that's a common objection, because if we put ourselves in seller's shoes, we want to know that there's something for us to buy, because nobody wants to pay those taxes, right? For capital gains. So for us, the process that we run and how many listings that we have right now, we have stuff coming up in Dana Point, right in the Lanner district there. We have stuff coming in San Clemente, our 9 units in Huntington Beach downtown, that just got put in escrow, but we had 4 offers on that. We ran a process, and we have other listings coming up weekly. So just reach out to one of us and we'll find you something.
And I mean, that actually brings me to ask you, Dan. I mean, hearing just from Long Beach to hear 800 a door, I mean, as an investor, if you put your investor cap on, I mean, what are you doing, moving into 2022?
I think that's a good question. I think it's really important to, buy a great deal, great asset. What does that mean? I think location. They always say location, 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 because you can't fix the location, you can fix the building. So in a perfect world, if you could, what a lot of investors like to look at is B locations, B properties. Maybe you buy a B location, but you buy a C asset and you bring it up to a B. You need to match the location. And I think that's what a lot of people are looking for, like the true value add. And the B is nice because sometimes you'll catch tenants moving up from like a C to a B location or property, but they want to stay in the location, but they want nicer finishes. Or an A, if we ever hit the other side of when we hit another side of a cycle, you might have some A kind of located pricing and tenants want to move into the B. So the B is kind of like right in the middle. I think that's what a lot of people are looking for. That's very sought after. If you can, that'll perform very well in a down cycle, coupling that with long-term fixed financing. I mean, especially on the Plex side, you can still get 30-year fixed financing. We're doing some stuff now where we closed one in Costa Mesa. They got it was a 40-year loan. It was the first 10 years were interest only, and then it rolled to adjusted to a 30-year fix thereafter.
Right, yeah, it was a block away from East 17th Street. The ownership did it, as you mentioned, a 40-year loan, first 10 years interest only, and then it rolls into that 30-year fixed after that. So in essence, they got a 40-year fixed rate at that interest rate, and that's phenomenal for them. And they could not be happier. They got great leverage on it. So debt and finance, you can reach out to us. We have all the connections in the marketplace because we're in there each day, whether it's within CBRE debt and finance or if it's private lenders, we will assist. We are advisors for you.
Yeah, and I think the big thing too is everybody's looking at interest rates are going to go up, right?
100%.
And we don't have a crystal ball, but if we look at odds, likely they're going to be higher today than they are, or higher later in the Q3, Q4 than they are today.
Yeah.
So that being said, what a lot of investors think is, well, the market might cool off. The market might cool off, and we can't put a crystal ball on and know what that's going to look like.
Yeah.
But from the feel of it, just us being on the ground floor with rental rates still increasing, that might offset the cost of capital, the rise of the cost of the interest rate. Mm-hmm. So we might not have any downward pressure on value if interest rates rise, as long as it's a reasonable rate hike. Yeah. So some people are kind of waiting for rates to rise. I don't know if that's maybe the best plan. It's really looking for the right piece of real estate whenever that comes up, if it's today or tomorrow.
I mean, also another question that brings up, and I mean, obviously you're touching on great points as a buyer, but let's say if I was maybe in a position to sell maybe this year in 2022, but my interest rates are pretty favorable, below 4%, my cash flow is pretty good. I mean, what would you say to me if I was thinking about selling? Should I just hold on and, hold on with the property? And
yeah, I mean, that's a great question. Whenever we talk with owners on the phone, it's if the property's doing its job and producing good cash flow and not giving you any headaches, probably you shouldn't sell it. Yeah. Long term, we're very bullish on holding apartment real estate. But if there's something within, let's say, a partnership dissolution, or you have a need for the cash that's more important, more significant than the cash flow you're receiving on your apartment property, then it could make sense to sell. And then that's specific to your situation, but an owner's situation. But as from the market perspective, it's never really been any better, right? Interest rates are at all-time lows. All the fundamentals within rates, vacancies, buyer demand, we don't know if that's going to continue to keep going and going and going. At some point it might level off, maybe to do with rates. We'll see. But it's hard to say hold and let's see where the market's going to go. We can only know about today.
Right.
And it's very, very strong. So it's the best seller's market in pretty much anybody's career. If you've been in the business for a year, or you've been in the business for 40 years, it's the best it's ever been. So I think a lot of folks would like to sell. If they're going to cash out or they have a need for the money, then it's a little bit more of a easier process. But a lot of other folks want to sell. They don't want to pay any gain, and they want to do a 1031 exchange. And then it's hard because we know of a lot of people that want to move out of their properties, but they want to have something under contract first. And we get it. I mean, if you got a good piece of real estate that's performing well and you like the idea of exchanging, it's hard to pull the trigger and jump into this market. Yeah. We can build out options to extend. Some clients feel comfortable with that. Some clients really want to get their up leg first. And then it's when that right up leg comes up, it's hard when there's multiple offers on properties. So it's hard to manufacture those transactions. We've been successful at doing a lot of them. And it's exciting, what good opportunities are going to come up this year.
Yeah.
But I know within all of our markets, we've got people that are knowing they already know the equity value of their property. They already know their return on their equity, how their asset's performing, and they're just waiting for us to kind of play matchmaker and find the right.
Yeah, it was kind of like with 30 and 40 Belmont. They tried selling the properties, twice before we were able to come in and show them our services that we could provide, and it still made sense for them to sell in this environment. And we just closed their, 2 buildings at about 2 weeks ago now, and they'll be going into DSTs or mobile home parks. So, true testament that it was a good time for them to sell.
And it was a blended. What do we hit? Almost 100% of the asking price.
Yeah, I think blended together, 100% of the asking price. Yeah.
No, it's not bad, and that was, I think, largely due to our just how wide of a net of investors that we have within 100%. The market, because we're not covering just Long Beach or just Orange County. We're covering all of Southern California.
Yeah, we have all of our specialty brokers throughout the regions, and then all bring that together when we have an exclusive representation, knowing that we have a seller that we can control and get a deal done.
Right. And to Trey's point, Dan uses this phrase all the time, a team will always be better than an individual, right? We here on our multifamily team have 14 members. If it's brokers like ourselves, if it's marketing, if it's client services, we have everybody trying to row together to assist clients. And that is helping us have a broader reach in getting listings, knowing what other people are doing. So that is a main attribute in how we've been able to help out clients over the past few years.
Absolutely. I mean, it comes down to timing, timing, relationships, and just being on the ground level. So when these opportunities rise up, we're sending it to our investor database and, creating great outcomes for our clients. Yeah. So, no, that's great. I mean, this is a great Q1 update. It looks like everything's pretty rosy. Yeah. I think we all wish we had more inventory because things are just getting absorbed so much, and there's so much buyer demand out there that it looks like there's just nothing for sale because it just whatever comes up is just getting absorbed in the market. But we definitely have, from the level of properties that we're sizing up, we definitely have a number of great opportunities hitting the market soon. So if you're in the market, let us know, and we're happy to help you.
Yeah, absolutely.
Yeah, thanks for having us, Dan.
Yeah.
You got it. Thanks, guys. Take care.